Good afternoon, everyone. I think we're at the trickling in stage. This is Don Hinkle-Brown, the President and CEO of the Reinvestment Fund, and Jeremy Nowak's successor as CEO. Welcome to the 6th annual Jeremy Nowak Memorial Lecture. When Jeremy passed, the board of directors at the Reinvestment Fund and senior staff thought it important to create something that would honor, commemorate, and practice some of what Jeremy believed and his principles and his method. And a lecture and a panel discussion is very much in that vein. At the same time, Penn IUR was looking to honor Jeremy, who had served for several years in the department and had been an instructor at Penn's Urban Studies program. Together, we created this lecture and panel series. This year is a panel. Some years it's been more lecture. And we've been pleased to have some of the people that work so closely with him involved. This year, Della Clark, myself, and Mark Pinsky. But in prior years, George McCarthy, who had been at the Ford Foundation, Mark Stern, who at SIAP worked with us on the social fabric building of community arts, and Bruce Katz, a longtime collaborator with Jeremy. In short, Penn and the Reinvestment Fund work together each year to create a lecture that speaks to Jeremy's vision about organized people, organized capital, and organized data and ideas that are the keys to building wealth and economic opportunity for people and places that have historically been disadvantaged. So this year, we have with us Della Clark, the president of the Enterprise Center and a partner in Innovate Capital Growth Fund. We have Jody Harris, the new president of PIDC and previously being the longtime director of the CDFI fund at U.S. Treasury. We have Mike Tamale, the CEO of Build From Within America. And we have myself, Don Hinkle-Brown. We will be moderated by Mark Pinsky. Mark led OFN for many, many years, and today leads the seeding of places for CDFI work through CDFI Friendly America. We will have a Q&A process, not in the chat, but there'll be a place to send your Q&A, and Ira will send them off to us speakers. We also have on our panel, or our welcoming talk, Karen Fegley, the Deputy Commerce Director, in lieu of the mayor, who was pulled away today. And she works in the Office of Policy and Strategic Initiatives.
Was that my cue, Don?
I think that is. Sorry.
Okay. Great. Hi, everyone. So happy to be here today. Good afternoon. And thank you to the Reinvestment Fund and the Penn Institute for Urban Research for the invitation to speak. I, as you heard, am pinch hitting today for our great mayor, Cherelle Parker. Very proud to join you. She had a conflict and simply couldn't join today. It was a last minute thing. And again, I'm proud to speak on her behalf and happy to be here. It's great to be alongside some of our country's great community development finance leaders. I can give you an overview of our economic opportunity agenda in the Parker administration, which was talked about yesterday at a celebration marking our the mayor's 100th day in office. The economic opportunity section was that went out to the press, had more initiatives than any other section, and that was no accident. To address the significant and growing economic disparities facing our city, we know that we need to move on multiple fronts. So we have to make it easier to start and grow businesses. We need to support diverse entrepreneurs and increase their access to capital. Also need to expand access to good jobs paying family-sustaining wages, and we need to support our neighbors who face unique barriers to economic opportunity. So the mayor's action plan laid down markers in each of these areas, and I'm happy to give a brief update on the work underway, and then talk a little bit about how CDFIs are going to play a role in all of this. So the mayor often says regulatory burdens impose a time tax on our local businesses, diverting resources and attention away from hiring that next employee or opening that next location. And so based on feedback from our local business community, we know everything we can do to reduce the cost and complexity businesses face when navigating local government can help spur additional economic growth. And that's why I'm thrilled that the mayor included a PHL Open for Business initiative in her action plan. Through this work, we're aiming to create a best-in-class client service experience to help businesses start, grow, relocate to, and remain in Philadelphia. And we'll be pursuing multiple strategies, including removing unnecessary regulatory steps, streamlining processes, accelerating approval timelines, and offering trusted guidance, advocacy, resources, and targeted investments that help businesses thrive. Our work's going to be grounded in the experience of our clients, local entrepreneurs and businesses, and informed by the insights of our frontline colleagues in the city, as well as all of our partners, our business support organizations that we work with. We know the best solutions to problems come from the folks who are most proximate to them. One of the mayor's priorities coming into office was to establish an Office of Minority Business Success to bolster minority businesses in Philadelphia, creating a thriving entrepreneurial ecosystem and connecting diverse businesses to opportunity. So the mayor has hired a tremendous leader for this work, Rachel Branson, who is establishing the Office of Minority Business Services, as a trusted resource to help answer questions, field concerns, and make connections within and outside city government. So she and her team are also breaking down silos and working across sectors to remove barriers and expand opportunity. She's also going to be working with PIDC, it's here today, to create a fund with flexible underwriting standards for early stage and small minority businesses. In the meantime, the mayor has committed for us to partner on monitoring $2 million in upcoming city investments to 2 local funds, Innovate Capital Fund, with Della Clark, who's here today, and the Philadelphia Accelerator Fund. Both support local minority businesses and help them scale. We're going to have a number of business roundtables, including one that is an equitable capital table, and that will be chaired by a local banking executive, but it will convene local and national investors who commit to supporting local diverse businesses with capital investments. The mayor has been crystal clear about the importance of workforce development and connecting people to quality jobs. And that's why one of her first official acts was to sign an executive order to remove barriers to city employment. The mayor also knows some of our neighbors face additional barriers to economic opportunity. So exciting work is underway to open neighborhood resource centers, one-stop shops for connecting our returning citizens with services and supports. Our foreign-born neighbors also often face significant barriers. And so the mayor is committed to seeking renewal of the city's certification as a welcoming city for immigrants. We know the city will truly thrive, and all cities will truly thrive, when we build equitable economies that fully leverage the talent and potential found in every neighborhood across our city. This year's Nowak Memorial Lecture focused on economic opportunity for everyone and exploring how community development financial institutions can support that key goal is a vehicle for that vision. And by having some of the nation's great community development finance leaders here to discuss how their tools can advance economic opportunity. I want to note that Mayor Parker has long been a staunch supporter of CDFIs and the many roles that they play in lifting up communities and neighborhoods in Philadelphia and across the country. In 2020, then Councilmember Parker signed on to a letter to the U.S. Treasury Secretary Mnuchin stating that CDFIs are a vital lifeline to the many small businesses and that we urge the inclusion of certified community development financial institutions as eligible lenders under Section 1109 of the CARES Act. The mayor is well aware that CDFIs ensure access to credit for impacted businesses, nonprofits, healthcare facilities, and individuals in low-wealth communities. In Philadelphia, small businesses that access capital through CDFIs help revitalize communities, grow the local economy, and create jobs and build wealth for those who are trying to grab the first rung of the economic ladder. The Philadelphia Commerce Department has always enjoyed a strong partnership with CDFIs. It was strengthened during the pandemic, when we had to meet on a weekly basis and we coordinated relief grant programs. Then Councilmember Parker supported city funds going to the PA CDFI network so that the CDFIs could help the businesses that they know and serve. All of the local CDFIs are active participants in a program we have called the Philadelphia Business Lending Network, and all of them helped create the Commerce Department to create and fund the incentive grant. Since the Lending Network Incentive Grant launched in late 2022, the city has provided $1 million in grants to 50 micro businesses owned by historically disadvantaged individuals. And in doing so, that made them eligible, or vice versa. They were eligible for the loans, which allowed them to be eligible for the grants. So they got matching loans and matching grants to build their credit and capacity. We're really excited about that innovative program. In addition to financing, Commerce is committed to providing coaching. We fund CDFIs and other business support organizations to provide technical assistance and training, including implementation of the fantastic Build from Within model that Mihilo created. Mayor Parker and this administration strongly supports the work of CDFIs in our city, and we look forward to partnering with many of you on work to increase access to economic opportunity for all in the weeks, months, and years to come. Thanks so much.
Thank you, Karen. Next, on our run of show, which I have to find, Susan Walkner could not be with us today for technical reasons. She is probably watching, but unable to fully connect. We would ask Karen to answer the question we had for the mayor, which was, well, your speech kind of did that, but we're here to discuss how the city's vision and the mayor's vision for economic opportunity for everyone can connect with the work of CDFIs. So we're going to introduce now Mark Pinsky, who will moderate us as a group to have that as the overall arching question, and he has some specific questions for us.
Thank you, Don. Thank you, Karen. I'm grateful to be part today of the Jeremy Nowak Lecture series. And first off, I want to take a moment to recognize Jessica Nowak, who's here with us today to honor her father and her family. It means a lot to us that you're here with us, Jess. Thank you for being here. And thank you, Karen, for your inspiring comments on behalf of our mayor. You and, as you noted, you and the mayor have worked with CDFIs for a long time. I want to take just a minute on behalf of the others who are in the audience with us to say a few things to just sort of frame out CDFIs so that we know what we're talking about here. And so very briefly, CDFIs are private, public purpose financial institutions that work with a business model that is profitable or aims to be profitable, but is not profit maximizing so that it can turn some of its revenue back into support for its borrowers and its customers. There are in the United States today about 1,500 CDFIs in 50 states. They provide financing for small businesses, for affordable housing of all types, for commercial real estate, for nonprofits, facilities and operations, and for consumers from everything from used car loans to mortgages. They work in urban, rural, and native communities across the United States. And according to a recent report from the Federal Reserve Bank of New York, they manage today about $450 billion, which is a long way from when Jeremy started the Reinvestment Fund. And just for a few things to sort of localize this a little bit, our data is that CDFIs have invested and loaned more than $1 billion, well over $1 billion, from about a dozen CDFIs in Philadelphia over the last 40 or so years. Notably, 74% of that financing has gone to BIPOC borrowers, as we would hope it would be focused. And just to put that in a little context from this state, that's more than half of all CDFI financing that's been done in Pennsylvania in the history of CDFIs. So Philadelphia is well served by its CDFIs, but still there's obviously so much more to do. And so, Karen, I would just start with a question to you on behalf of the mayor. Is what does the mayor see CDFIs doing to advance her vision for the city and all of the things that you outlined? What would you like to see from the CDFIs? We'll have a chance to respond later, but we'll give you a chance now to answer.
Okay, great, thanks. Yeah, the mayor is really, I mean, economic opportunity for all is, you know, it's the mission that it's the line we are all saying every day, all day to ourselves. And it's a real commitment. And so we know that we have to be holistic in our approach. I mean, the mayor fully recognizes that, but creating opportunities for businesses is something she is very committed to, and also committed to these partnerships. We know it's not something the city can do, right? We need the partnerships of CDFIs. We need, frankly, just because of who you are and where, like, your positioning in the communities, that's necessary. And um, and also in those relationships you have with businesses, as well as the experience and knowledge. You know, the mayor knows that CDFIs are the experts on the services that businesses need, on the building up, the capacity building that's necessary in order to get to capital, right? We know capital isn't always like step number one. Often there's a lot of work and hand holding that goes into all of your efforts before you can actually make that loan. And so there's a commitment to that. The Commerce Department, like I said, we've been funding this sort of work. The mayor is certainly looking at how to continue and expand and leverage it, I think, as much as possible. I think that's one of the key things, right? How do we make sure that our investments are complemented and leveraged for the most impact?
Thank you. Yeah, I think there's a lot of discussion to be had there. It's been now 101 days, right?
Right.
You know, we can at least give you the next 100 days as we work on sort of how we can work together to do more for the city. And I just wondered if there's anything else that's in the longer term plans for what the city might do to involve CDFIs, or, you know, should we be bringing those ideas to you? You know, what can the city do that you know, or is thinking about doing, the mayor's thinking about doing, that would help CDFIs do more for all those reasons you've already outlined?
Right. Well, you should always bring ideas to us, right? We always want to get ideas fed from the folks that are doing the work. But one of the things that's coming up, again, I talked about the Open for Business initiative. That doesn't directly impact the CDFI's work, except, like I said, I know it does, because I know that everyone struggled in supporting a business going through the system of, you know, the bureaucracy and the red tape that comes with doing business. And so if we can make that part easier, I hope that will make everyone's job easier. But the other project we're working on right now is building a business resource, an online business resource hub. There are many cities have this. Philadelphia has a version of it on our Philadelphia website, but it's something that has also developed in our communications and our regular conversations with CDFIs and other business service organizations, that we need something that businesses can navigate. You know, it'll be online 24/7, 365, where they can navigate and access the services, whether it's technical assistance and training, or whether it's getting that loan that they need, and access that from the micro enterprises as they grow. I mean, one of the things I think we're all in agreement we need to focus on is helping businesses grow. We need to get them from here to here, and there's a lot of steps in between, and there's the necessity for a lot of partnerships in there, you know, a lot of different players to kind of help and support that growth.
Thank you. One last question for you, if I can, that came in actually from our audience. So we want to encourage people to put their questions in the Q&A, and we'll try to get to as many of them as we can. But one of the questions that came in was related to the sports arena that's being discussed on Market Street. And I know that there's a lot going on with that. CDFIs care a lot about the communities, as does the mayor, and so we're together in that. But you know, we do worry about the impact of economic and cultural displacement that's being discussed, obviously. And I just wonder if you could help us understand a little bit about what the process is going forward around the proposed arena, and not specifically CDFIs, but I think it'd be helpful for everybody to know that.
Sure. We're doing looking at some studies right now. Well, there's studies underway. We're looking at the pieces we have and waiting for some more impact, or more of the final study, so that we can really evaluate the impact of a sports arena in that location. we're fully open to all possibilities. I'm going to say I'm not fully prepared to talk about the arena in itself, but what I can say is there is a commitment, like I said, to small businesses, to being a welcoming city that allows new immigrants, new Philadelphians to continue to start businesses. So we are exploring other kinds of incentives, arena or not, but the arena away, just in general. I know a lot of cities have programs for legacy businesses. We don't have that specifically here in Philadelphia. And one of the things we're looking at is we don't just want to support the legacy business. Again, we want to create an environment that is continually open and available to new businesses, right? To the legacy businesses of tomorrow. So, so we are definitely looking at evaluating the resources we already provide to the small business community and looking at if we need to target those to specific, cultural destinations, historic destinations, areas that that are certainly, attractions and part of what makes our city a great place, and we want to preserve those.
Thanks, Karen. I had planned for the panel later to have a lightning round at the end to let them sort of answer a couple questions. I'm going to do a quick lightning round with you because we have maybe a minute.
Okay.
So the first question that came in was whether the mayor has a perspective on the universal basic income strategy and whether that has any role actively in her economic development program. Just a quick response.
I know that we are supportive of the city. Our city council has a committee to a task force to look at reparations and what that would mean in Philadelphia. We're definitely supportive of, yes, raising our minimum wage here in Pennsylvania. We are one of the lowest minimum wages and recognize that there's a need to increase that.
Great, that's welcome. Last lightning round question for you, Karen. The mayor relied and brought together business roundtables during the transition period, and just wonder about the role of them going forward and whether there's a role for CDFIs within that or a role for a CDFI roundtable for that matter. So. Yes,
absolutely. As I said, there is going to be a capital access roundtable. The members are still being put together. We have, I have from the commerce seat, made sure that the mayor's office is aware that we have our convening of the business lending network, which is not just CDFIs, it's also other lenders, and that we also meet regularly. We're lucky to have the PA CDFI network that brings together all of the Pennsylvania CDFIs and obviously all the Philadelphia CDFIs. So we have multiple convenings of that, and I'm positive that some of that is going to intersect with the mayor's roundtables.
Great, thank you for being here. We miss Mayor Parker. We appreciate her trying to be here, and we look forward.
I know she really wishes. I know she wishes she could have been here, and I'll make sure to share this. So thanks.
All right, we'll be here for the next conversation. So
sounds good.
Thank you, Karen. Don, are you coming back on? Or are we just rolling right into the panel? I'm going to guess we're rolling right into the panel. All right. If our panelists want to join me on camera, that would be great. Oh. Wonderful. And we'll get to introductions in just 1 second. You've heard who they are. We'll talk a little bit more about them. We'll give them a chance to talk about their organizations and in more detail the work that they're doing. I want to just take a moment to say that when we talk about CDFIs, it's not really possible to overstate Jeremy's important role in creating the CDFI industry as we know it today. We know that he started the Reinvestment Fund. He made it into a force not only in Philadelphia but nationwide, and that Don and his team carry that forward, and we honor that today as we come together. But not everybody really knows the role Jeremy played nationally, and in fact, I think even those of us who are friends with Jeremy and involved in the industry didn't really know until we lost Jeremy just how wide and deep his impact was on this country and on CDFIs. He worked directly with hundreds of CDFIs in his years in the industry. He talked with, he helped, he assisted, he supported thousands of practitioners, and he played a long list of critical roles at the industry level in making us into the industry today that punches way above its weight. And I just want to share one quick story that came to mind as I was preparing this morning, which is that when President Clinton first proposed the CDFI fund, the Senate Banking Committee decided it was going to have a hearing on the proposal to create what's now the CDFI fund. And everybody in the CDFI industry had a discussion about, since we knew we'd get an invitation to testify, about who should testify. And there were lots of reasons for lots of people to testify. When we sat down with the Senate Banking Committee staff, they said, don't think of this as an honor. Think of this as a little bit of a street fight, because our biggest challenge is going to come from Senator Al D'Amato, who's the ranking Republican on the committee, who really is out to sort of challenge and undo this, the notion of there ever being a CDFI fund. And so we really need somebody who can go toe to toe with Senator D'Amato and still be calm, cool, and collected, and can explain the whole industry. And we all looked around at each other, and everybody said together, "That's Jeremy." And at the actual hearing, Senator D'Amato came out with blasting his argument, and it really took Jeremy no more than 2 or 3 minutes to not only to calm him down, but to win him over. That was a critical moment. The CDFI fund could have been taken off its course before it even really got started. So, but last of all, on a personal level, Jeremy profoundly influenced each of us who are on the panel today, and you'll hear a little bit about that perhaps. But I think that in turn, each of our panelists, Della, Jody, Mike, and Don, have transformed their organizations and the communities that they exist to serve for the better. So I'm gonna turn it over as we get into our conversation. I'm gonna turn it over to the panelists and ask them. And we'll start with you, Della, and then Jody, and then Mike and Don. We're gonna ask you to introduce yourselves, but really what I want you to do is explain what your organization does and how you think about that challenge of how do you create economic opportunity for everyone. Della?
Thank you. And I'm delighted to be part of this Nowak lecture series today. And I want to start out by saying that the one DNA that Jeremy had that I inherited from him was being a disruptor, right? As I think about Jeremy, he definitely was a disruptor. And that's what I respected and liked about him the most. The second thing is that he started a venture fund. And I was on that board, and at the time, I didn't know anything about funds or venture, but that's where my lingo began to be shaped and my vision. And so today, the Enterprise Center has a fund, and I give that tribute and honor to Jeremy because he laid that groundwork for me. The second thing that I want to share with everyone is that I joined the Enterprise Center 32 years ago. It's a 34-year-old organization, and we started out with a program mentality. But today, 34 years later, we're focused on capital. Because while CDFIs has played a major role in the Enterprise Center and putting out capital on the street, that we did bring some harm to our clients' balance sheet. And so the rest of my discussion, Mark, and the rest of the panel is really from the lenses of our client. I've seen over the years that our clients' balance sheet, they've become a hamster wheel of debt. And partly because that we were so busy caught up in the numbers. How many loans that you do on a monthly basis? How many you do on a quarterly basis? What's the impact? How many jobs? That we became more focused on our own balance sheet and the data and less about our clients. And so today we're focused on changing the narrative, right? Such words as technical assistance, we want to put that in the graveyard and call it business support services. We want to put in the graveyard just me. Oftentimes we would ask clients, who's on your management team or who's part of your organization? They would say, just me. We want to change that narrative and help our clients build management team, as an example. We now understand the difference between underserved and low wealth. And so clients who come from low wealth communities, their parents do not own the boots and the strap. So if you tell someone whose family don't have any equity, tell them to bootstrap it, they're not able to. And so they end up getting loans and they get debt. And over time, they're never able to cover that hole up. And so what we have learned with our equity fund is that equity really gives clients a vote of confidence. Whereas when you think about debt, it's really to meet a condition of that business. And so as I began to work with our small businesses, they have no idea about their capital stack. They have no idea about their balance sheet and what EBITDA means and retained earning means. And so today we are converting the Enterprise Center into a capital and investment center, and it's working on a new strategic plan that will begin to move us in that direction. So in closing, we're going less on programs that we often internally use the word programs to really becoming a capital investment center and becoming that beacon on the balance sheet so that we can get our clients to focus on that and less about chasing contracts, but more about building business infrastructure. So as I think about the enterprise center CDFI in the future, we really are going to help our clients build a financial strategy, help them with pitch deck, investor decks, and help them understand how you need both debt and equity. Because as a capital landscape, it is not just about debt and it's not just about equity, but how do you put both of them together to build your company and grow? So that's where we're focused on today.
That's awesome, Della. Thank you. You've been at this for a long time, and you've had an incredible ride. It's exciting to hear where you're going. Jody, your screen tells us that you're driving growth to every corner of Philadelphia. Talk to us a little bit more about what PIDC is doing and how you think about economic opportunity for all.
Great. Thank you, Mark. And thank you for the invitation to participate on this panel today. I am the new-ish president of PIDC. I came on board in June 2023, and that was after being the CDFI Fund director for a number of years and working within the Department of the Treasury on various CDFI issues in different capacities. And I have to say that being invited to participate on this panel is truly an honor. The panelists I am joined by have been names that I have known and worked with over the years, and they've really laid the groundwork in Philadelphia for CDFI. So again, thank you for the invitation. PIDC is a long-standing public-private partnership with the city. We are an economic development partner, and we drive growth in Philadelphia in three primary ways. One, as that city partner, we're the fiscal agent and conduit partner for a number of programs and actions that the city wants to take to support economic development. So we work hand in hand with the Commerce Department. Karen Fegley is someone that we work closely with, as well as the mayor's administration to shape their economic development agenda. The other way we work in the city is by managing transactions on behalf of the city when it comes to the industrial land bank. We also facilitate large development projects across the city. Some of you may be familiar with the Navy Yards, one of the largest developments that PIDC has been managing and is planning development for the past 20 years and for the next 20 years. But the part of PIDC that I'll focus on today is PIDC Community Capital, which is our CDFI. And our CDFI has been in existence for about 12 years. We started off as a CDE working with New Markets tax credits, and we've grown to develop a suite of products and services as well as targeted business support for small businesses across the Philadelphia landscape. So again, thank you for having me, and I look forward to our discussion.
Thank you, Jody. And I realize that as the former director of the CDFI Fund, you may have had another whole set of relationships with Jeremy. I don't know if you overlapped, but that's another conversation, but for another time. So.
Yeah, great. Thank you.
Mike Tamale. Mike is now the director and CEO of Build From Within America, a national effort to take some of the lessons he's learned in his work in St. Paul over many years with the experience and the innovation of others. So Mike, tell us a little bit about Build From Within.
Thank you very much. Appreciate being here, and it's an honor, especially being the only non-Philadelphia guy on this panel. Great to be with you. You have an amazing city and an amazing community development scene, so it's genuinely an honor for me. I've been doing the same 32 years that Della has, almost to the day, I guess. But what we came from at Build From Within Alliance has really sprung from our experience with the organization called the Neighborhood Development Center in the Twin Cities, which starts not from a CDFI perspective, but starts with a neighborhood perspective. We're neighborhood folks. We really came out of the community development corporation scene, the commercial corridor, revitalization scene, the areas of real concentrated poverty in our city, mostly communities of color. And efforts that we had for years to try to revitalize those, I guess by looking outside of our community, trying to bring in businesses into our vacant spaces, et cetera. What we figured out 32 years ago was that our neighborhood actually abounded with entrepreneurial talent, but trying to reach those folks, trying to actually respect them enough to want to reach them, took a different approach. And so starting back then, we created whole networks of neighborhood partnerships. It could be neighborhood groups, it could be churches, it could be ethnic groups, women's groups, whatever, that had the trust of the people we're trying to reach. And then started walking along the side of those folks that wanted to start a business, that already had a business underground, and maybe had a business above ground, but needed all kinds of supports and help to get on the first rung of the ladder before they could even launch their business or stabilize it enough to move up to the second or third rung and be eligible for CDFI funding. Neighbor Development Center is a CDFI, but that's just one of the tools in this sort of package where we're trying to respect the actual experience of each of our customers, which are these low-income folks that either are entrepreneurs or want to become entrepreneurs. Over the 32 years, Neighbor Development Center has trained like 7,000 people out in their own communities in small groups to start a business. We've financed over 1,000 of them. At any one time, we have about 20% of them actually open in business, and on average, they're staying in business for 10 years, obviously employing their neighbors, being role models, et cetera. So the Build from Within Alliance is a slowly growing set of community-based organizations around the country that have been interested in adopting and adapting that model in different ways, including a number of groups in Philadelphia, the Welcoming Center, Neighborhood Progress Fund, and Greenland Capital Access, all supported by your Commerce Department, supported by your Merchants Fund, research and evaluation done by our very own Ira Goldstein and the Reinvestment Fund. So the connection into Philly is really powerful. Also down the road in Wilmington, Delaware, the West End Neighborhood House has been taking this model into all their own communities. Obviously, it's way on the bottom of the economic ladder, but we're moving people up. It's the same ladder that Del is talking about with equity. It's the same ladder everybody's talking about here. But the idea is to try to refocus as many of the folks coming through that system and up that ladder back into their own neighborhoods whenever possible to start, really rebuilding their economies from within is what we call it. So I'll quit there. Mark, thanks.
Great, Mike. It's great to have perspective from other places, and we all do that in the CDFI industry. There's a lot of connection to other folks doing innovative things and important things in other areas. So I just want to note, please keep your questions coming in the Q&A. We will get to them in a little bit. We want to give the panelists a chance to introduce themselves and their organizations. Don, can you tell us about Reinvestment Fund?
Sure. Thanks, Mark. Well, I probably have to say a little bit less if everyone's here because there's some attachment to Jeremy Nowak. Our original business model was the premise that he, as a community organizer, could move on from having organized people to start to organize capital. And we quickly learned that you also had to organize capacity. Hence, one of our early affiliates did that technical assistance and community planning function. And then we moved on to realizing that you also had to organize data to make wise decisions and to make your pitch to local government or state government about why they should support this work. You had to have the data, both to evidence the need, but also to evidence the impact. So we've continued with that business model. Our prime business unit organizes the capital. Ira founded our team, which organizes data and does analytics for clients and studies both the problems that they face, but also the impacts of their programs and their initiatives. We continue to partner with organized people in a host of ways. And we have just recently started a fairly new business unit, which is where we're returning to organizing capacity right now in the space of food access, early child care, and social determinants of health. As a CDFI, we had the blessings of growing up under Jeremy's leadership. He was really one of the champions that CDFIs needed to be funded based on having a sustainable business model. And in the early days at the US Treasury, those fundings were really mini business plans, right? They weren't so many, actually. They were quite involved. And that survives today. You can still see the fingerprints on the FA program around business function, business feasibility, and sustainability. As a larger loan fund now serving most of Eastern US and many programs going nationwide, we have had the luxury of being able to de-emphasize our kind of hyper focus on our own sustainability. You know, much of our industry creates programs and products with this heavy lens on, can we afford to do this, and are we going to make money doing this? Growing past that, one can then start being effectively a domestic policy partner to state, local, and federal government. And that's really where I think the sweet spot is for CDFIs, is to be implementation partners for new domestic policy ideas. We've seen this happen in a number of ways, and with the Reinvestment Fund, the best example is our fresh food financing. We help define the problem, we help define and construct a programmatic response, and now today we run a nationwide program for the USDA in that space. A very rare instance of USDA outsourcing a program. Like Della, we have also traveled along and kind of gotten tired of the road of debt as only tool. And there are such limitations to debt as the only tool that you have. We made a foray into private equity. It did not have the right attachments to the rest of our work in terms of impact on underserved populations. But we're returning to that as it relates to Black and brown developers, and we'll be launching this year an equity product for developers. That's new for us again, but it's really important because we've just seen the limitations of stacking more debt on an equity light balance sheet doesn't really work. It only works if we accept it, but then it doesn't help those developers access additional resources because others may not buy into that level of leverage. I think I'll stop it there so we can get to others in Q&A. But the Reinvestment Fund is thrilled to be here with these partners. We have worked with all of them in some fashion, or copied them in some fashion, or benefited from their work in some fashion. And I'm thrilled that you're all here to remember Jeremy's work and to talk with us about the road forward.
Thank you, Don. So let's get back to the mayor's comments, or Karen's comments on behalf of the mayor. You know, the general question here is, what's your response? But the more specific question is you know, what do you see in that where you think CDFIs need to be involved, or where are priorities for you in what you can do, and how are you going to respond to this or this? So maybe we'll start with Jody, if you're willing.
Thanks, Mark. As the city's partner on a lot of initiatives that are targeted to small businesses, I think one of the things that is very important is being able to see CDFIs as Don said, an implementation partner. We have flexibility, we have know-how, we have access to resources that can complement the resources that the city puts forth for these initiatives. I also think one of the things to recognize with CDFIs in terms of working with the mayor's agenda is that flexibility, and there is enough room for all of us on this call, as well as the others that are in the PA CDFI network, to help support that. The need is great enough, and we all have different strengths where we can play a part. And so in thinking about all of the capital that's been mentioned in that kind of debt to equity spectrum, there's a role for all of us in supporting small businesses across the city. And I'm encouraged that the mayor is seeing CDFIs as one of the tools, one of the implementation partners, one of the ways to reach out to the small businesses.
Having trouble getting to my microphone. Della?
Well, I think we have two of the largest CDFIs in Philadelphia on this panel, which is the Reinvestment Fund and PIDC. I have to be honest and say there is a capacity gap for many of the CDFIs in Philadelphia. So as we think about supporting the mayor's work, we have to be candid and say, many of the smaller CDFIs balance sheet look like the clients they're trying to serve. And so I think we need to change the narrative here and begin to build capacity of our CDFIs so that they can play a more implementation role in terms of the vision of the city. Because right now there is some significant weaknesses in the capacity of the smaller CDFIs. And so I think that needs to be part of the dialogue and conversation, is how do we help build their balance sheet? Because right now, cost of capital is high. And so to go and get capital from banks now, you're not going to get it at the same rate that you might have received when the CDFIs first started back under the Clinton administration. So it's doing a paradigm shift with the inflation and everything, and how capital flows in this present economy.
Thanks, Del. And one of the things we learned as the formation of the African American Alliance for CDFI CEOs was not a surprise, but it got documented, was that that CDFIs that are led by people of color have a more difficult time getting access to capital than CDFIs that are led by others.
Correct.
That's a compounding factor, right? And so, and as the industry grows and there's a lot of resources coming in, making sure that it's really distributed in a way that's going to produce the results that we want as an industry, are always a challenge. It's something we need to pay attention to. We do have some questions coming in. Let's wrap up this one. We'll go to the audience, but Don, we'll have you go respond to the mayor.
We know the mayor quite well, and we trust that this is an administration that is a listening administration and a collaborative administration. You know, that changes from mayor to mayor. Some come in and it is a one-way dialogue of how you can help us. And what's wonderful about this mayor is we know that dialogue will go both ways. Not entirely solution-based, but collaborative-based. We have helped the city in a number of ways and stand ready to continue to do so. You know, we have been an ad hoc data advisor to the city in a number of ways, whether it's a question comes up around what is the impact of reverse mortgages in Philadelphia? What is the impact of foreclosures? What is the impact of evictions in Philadelphia? And we've stood ready to do those both on the fly, on the back of an envelope kind of data studies, but also then deeper versions of that when that's necessary and when there are resources for it. We also have run some programs for the city that are essentially pilots, right? So while we ran a statewide, we run a nationwide food access program, we're also running a very small food justice program in Philadelphia that allows us to create eligibility and targeting parameters that are very specific to what the city wants to get done. The particular areas they want to address, or the particular demographics or eligibility concerns they want to address. And we're thrilled to do those kinds of micro or pilot examples of what's possible with a small amount of money. And then, of course, we also are ready, like PIDC, with the kind of bigger gun resources that new markets can bring to bear, or larger leverage to more signature projects that may get done. While we'll never be relevant to a stadium project, I hope, we are very relevant to the kinds of cornerstone projects that can become the anchor from which a whole lot of subsequent development hinges, and continue to do those very significant, you know, multi-million-dollar projects that still don't get well received by conventional sources of financing, that may still need substantial amounts of subsidy to get to the finish line, but then trigger a ripple of effects through a neighborhood or a corridor. Our best example of that is the year after year after year after work that we did on North Broad Street. Some of the work that we did in West Philadelphia, from Mantua all the way around to Southwest. So big guns are available and capable of being aimed. We love doing pilots that demonstrate concepts, and then we're there with data and analytics on the fly, so that legislation or aiming the city's resources can be more accurate.
Great, Don. I think it's interesting. All of your answers so far have spoken to the fact that the description of what a CDFI does, its role as capital, doesn't describe all the things it really does and all the roles it plays in relationship to different partners. The city is a partner, but also private sector is a partner, and philanthropic side is a partner. So it's really interesting. And Mike, you have the ability. You look at this from an outside view, right? You're kind about Philadelphia, and you're welcome to respond to the mayor of Philadelphia. But you see it from St. Paul, but you'll see it in other places as well as you look across your network. And I just wonder how you think about things that Philadelphia CDFIs and the city need to be thinking about.
Yeah, I absolutely would not presume to know what Philadelphia needs to think about, because you guys are so far in front of much of the industry. But the one thing I'll mention real quick is where a lot of our work and the model come together is on business incubators that present as public markets. So we have Midtown Global Market, Mercado Central in Minneapolis, up in Syracuse. One of our members opened up Salt City Market. Those are 3 examples you might want to take a look at. There are key intersections, high visibility locations in the heart of low-income neighborhoods, and they're filled with businesses that are continually trained, supported, financed by whether it's a CDFI or the member of our organization. And the space there is long-term affordable for those types of businesses to start up in. And that's where I think, again, it's not a typical CDFI activity, but it's absolutely the most powerful neighborhood revitalization stimulus that we've seen come out of our program.
Yeah, thanks, Mike. The Central Market, I remember decades ago, right, was when it got started, played a really important role in sort of organizing the market for folks who otherwise wouldn't be able to have access to market, and has been really an important thing. So it's interesting to hear about other cities where that's happening. Let's turn. We're getting more questions, I think, than we'll answer. So, but let's try from the audience. One of the questions that I want to ask is there's a question about how you set targets and vision for the impact, particularly the impact you want to have in a community. How do you do that? How do you think about that? What are your current targets, and what have you learned, in the process of doing that over all these years of experience that you all bring to this? And I'll see who wants to raise their hand first before I assign it. Anybody?
Well, Mark, I'll take a stab. This harkens back to a very old conversation I would either witness Jeremy having with many people, or I would have with Jeremy, that to have intention and hold yourself accountable to the projected impact that you're designing in your program or a transaction is a little more virtuous than typical in our space. Our space tends to respond to these questions with outputs and square footage created, seats in a school or daycare center created, jobs permanently or temporarily created. And that's not really what you're asking, right? The goal here is, for instance, in our food program, we know how many people are too far from fresh food in a particular catchment area. We can calculate how many people that distance should be cured for by financing a particular size store at a particular address. And then subsequently, we can redo that work to reconfirm that those projections became true. That's rare in our space, right? And I think one of the reasons it's rare is, for instance, you take another niche like affordable housing, and you add up even all the efforts of a large loan fund like the Reinvestment Fund. We do not move the needle on the scale of the problem. So because we don't move the needle, we stop measuring the needle, unfortunately, right? So the people who do the needs assessment are completely different from the people who do the actions to address it. And those actions are minuscule compared to the problem. And it can make you feel like you're putting a cup of water in the Atlantic Ocean, right? Great project, great physical asset, great addition to a neighborhood, but the gross numbers in a county remain the same afterwards. And more recently, you're also losing, water out of the tub, in the sense that there's continuing units leaving affordability as you're making new units entering affordability. So sometimes I feel like we feel smothered a bit by the need. And even though, we're a very large loan fund, we are tiny as it relates to domestic policy problems like affordable housing, like employment in certain populations and certain geographies. And as a result, we all go back to counting outcomes. And we don't always count impact, because nobody wants to say, I financed a $9 million project and the stats remain the same afterwards. It doesn't mean you shouldn't finance it, right? These are capital infusions into place and asset creations and cultural institutions that need to be in place, but you may not have really moved the needle that much. What you're doing, though, is you're planting a flag and you're inspiring people to what's possible. If only we could do a tremendous amount more.
Don, I just want to pick up on something you said about the fresh foods work that you did, which was pioneering and has led the nation into embracing that. It was sort of, to your point, it was sort of practice led, right? You knew there was a problem, you went out and did it, then you began to be able to collect data around it, and you began to be able to sort of scale it and scope it a little bit, right? So you could respond to it, but it's a discrete thing in a sense relative to affordable housing, which is a much bigger, multivariate, complex thing. That's much harder, as you said, to address. Anybody else want to look at that, talk about that question about targets, impact targets?
Well, I was going to add that what Don is saying also connects to this discussion about data and the quality of data, and actually kind of thinking about the work that Jeremy did in the early days around putting it on maps, making it accessible to people so everyone had the same starting point when looking at problems, is something that I think we need to get back to. We need to get back to measuring data, defining data, and measuring it in a way that not only helps the CDFIs target their work in line with a economic development strategy, but also helps us communicate that to partners. I think when CDFIs communicate what they do in terms of impact, we know what it means, but the bankers, the funders, the impact investors, the family offices, all of these groups that want to do impact, sometimes we're talking past each other. So I think in terms of looking at what we're collecting, is what we're collecting meaningful? Is it meaningful enough to move the needle, or at least meaningful enough to get others on board to help us move the needle? Is a bigger conversation about the role of data in CDFIs and in the industry, and how we use that to leverage our resources with other outside partners.
It's almost a cost benefit sort of thing you have to decide each time you want to think about that question, I think. That's what you're... So let me, Mike, there's a question I think you might be able to be helpful with here. We hear a lot about new American or immigrant entrepreneurs, and we hear about informal, unregulated lending circles and that model of things. And I just wonder if you have any perspective on that, and whether that's something that we want to encourage, or that Philadelphia should be embracing or advancing. So, in San Francisco, there's been an effort to create a structure around informal lending circle, an infrastructure and an ecosystem.
Yeah, to me, it starts again with connecting with these folks and getting trust going with them. And if they're in those informal financing networks as a starting point, how do you get them up to the next rung of the ladder, which is maybe with your CDFIs, or maybe with a training class or whatever. They're doing these informal networks on their own. They do it in the countries they come from. They do it within their own families and their own friend networks. And so it's not an issue of helping them do those as much as where do they go from there. And when they're coming from other countries, particularly if it's a developing country, helping them navigate all the regulations that Karen was talking about earlier, helping them figure out how to take a next step with their business without going to often a predatory lender of some sort. I think that's what I would add here is you want to be able to grab these folks through trust and through cultural networks right away, so that their next step is a positive one for them.
Yeah, the trust issue is enormous. Every CDFI has to work really hard to earn trust, and has to sort of earn it one transaction at a time if it's in a involved with a sort of a new community or a different community. That's really, that's a huge challenge. So thank you for reminding us that, Mike. Adela, I want to come back to you. I know because I've seen you at various impact investing events, that you're plugged into this world of impact investing, and let you start this off and others join. But what does it mean? How is that affecting you? Is that creating opportunity for you? Is that creating challenges for you? How do you try and you sort of work with the impact investing community?
I think it has really changed our perspective on how we work with low wealth founders and CEOs, right? Who come to the table with high aspiration, but low in assets and low in resources to achieve that aspiration. And in the past, we did have it from a debt lens perspective, right? Looking at that balance sheet, looking at their ability to pay. Whereas being now in the impact investing and equity world, it's really about how do you structure those aspirations toward a growth strategy, right? Developing an eye for the economy, learning how to understand what EBITDA is. So it really is helping the Enterprise Center come up with a narrative change, come up with a whole new strategy of how we approach our clients. Most times when we ask our clients to send their financial statements, they would only send the income statement. Very rarely would they send the balance sheet with it. Now we're focused on, you got to send us the balance sheet, right? And we're focused on that because we know that if you do not build that balance sheet where the enterprise value lies, there's no cashing out, there's no exit, there's no building more capital on that balance sheet. So I think now being in the impact investing world and the equity world, it's helping the Enterprise Center do a better job.
Oh, that's great. That's great. Others? Jody, did you want to respond?
Just that the need to look at the impact on the business in terms of the products that we're offering is just as important as the impact that our actual dollars do. And I agree with Della in terms of having those conversations about the role of debt and equity for a small business. We need to also continue to talk about grant support. Not all small businesses are going to be at the place where they can absorb or want to take on a large equity investment or a significant one, but they just need the grant capital to get up and running. And so one of the things we're looking at is how do we, with the debt products that we offer, because right now we do just offer different types of loan products, is there grant support to help some of the smaller growing small businesses get over the hurdle to be in a place where they'll have that stronger balance sheet to go to places like the Enterprise Center and have those conversations. And then there's also that that capacity, that technical assistance side, the education piece to explain to them how all of this works and how this benefits them, or how they may not be ready for that and need to do some other things. So there's a lot that comes into thinking about the impact we have on the small business, just not the impact that our dollars are making when it comes to quality jobs created, square footage developed, and that sort of thing.
Right. I do want to add, Mark, not to just challenge a little bit about the grants. We have seen that if the grant conversation is not calibrated, as they grow, they're still looking for grants. I think that we need to convert grant into patient capital and stop using the word grants and start using the word inpatient capital, because they're not able to understand the difference in the capital landscape, how grant is a short-term, just addresses a particular stage or cycle or condition. And that's never discussed. So I'm having larger business looking for a grant. And I don't think that it is done in such a way that people understand the difference. So I'm not against grants, but I like the word patient capital a lot better.
Thank you, Della. I mean, I think that's something that as the CDFI industry has changed, it's had to learn to sort of deal with the whole range of types of capital and figure out what the appropriate way to do that was, and not just to fixate on one type, but to really figure out how to grow that in a healthy way, as you were talking about earlier. So we have many questions I'd like to ask, and unfortunately I'm not going to have time to ask all of them. But I do want to ask you as sort of the lightning round. I'm going to ask everybody to respond to this. Is what did you hear today that most excited you, or most impressed you, or seemed the most important thing to do? And what are your top of mind thoughts about what it takes to make it happen? So who wants to jump in?
I can start. Two things that jumped out at me is the role for CDFIs in different stages of a small business or a client's development. And we all talked about a range of products from patient capital, debt, to equity. I agree with Della in terms of educating and supporting our small businesses and understanding what's out there for them, but also noting that different CDFIs bring different strengths and we all have a role on that capital continuum. The other thing that jumped out at me is just kind of the flexibility of CDFIs to pivot into places, sectors, industries, as Don was noting, and to serve certain populations as Mike was noting. And there's a place for us because the need is so great and we have to keep our eye on the need of supporting our communities and how we all fit in there. So those are the two things that kind of jumped out at me.
Great lead off. Thank you.
I'll jump in. I think my takeaway today, particularly hearing Don and Jody speak, is that organizational capacity really matters. You cannot have, data and do all these things if you yourself do not have organizational capacity. So my takeaway is that I think CDFIs need to focus. They don't have to try to be all things to all people, but build their organization capacity and know that strength and stay in that lane. But we need to build more organizational capacity. And I'm really proud to be on this panel with Don and with Jody.
Well, that's great, Della. What do you think the city might do to help make that happen?
As I said, their funding cycle of the city doesn't align with this organization capacity, because when you get a 1-year grant or 1-year opportunity, and to report the data within that cycle, particularly if you work in a certain community, you won't have that data to report. On an aggregate basis, if you're a large organization, you might have more data, but a very small organization, you can't do that within the cycle of the fundings. And so I think that we need to take a look at how we fund CDFIs. We really force us to compete rather than collaborate because it's a small amount of money. I just think the city really need to change the whole CDFI funding model.
Thank you. Mike, Don, takeaways?
There's been some great work in Pennsylvania around organizing CDFIs, and I think Philadelphia can advantage itself of that roundtable now that already exists. It's a place where we can skip past the competition phase, where we can decide who's the best fit and move forward quicker. So I think that's really important. Back to the commentary about grants are sometimes the solution to capitalizing a small enterprise. The new certification for CDFIs cuts directly against that. Our grant making activities are no longer CDFI serving activities. And if our mission is to serve nonprofits, they can't receive equity. You can't invest an equity instrument in a nonprofit. The equity instrument is a grant, but it's not seen as financing, even though we've spent a tremendous amount of work doing due diligence and underwriting to make sure we're picking the right organizations to invest scarce capital in. As soon as it's got a grant agreement attached to it, those hours spent and those dollars invested don't count on our CDFI mix. That's something that maybe Jody could help us with, going back to her companions, because it's really an unforeseen problem. I get that when we all did PPP or when we did mass amounts of grant relief, that wasn't really underwritten. That was emergency aid, and that's not a classic CDFI investing activity. But when we do an RFP for growing early childcare centers, and 90% of them are nonprofit, and what we give them is a grant to grow, that takes the same work and the same skills as giving them a loan, but that money's permanent, and the loan is leverage, and we'd like to be able to count both. So there are some structural issues to us being doing what's best, and I think we could use some help at the federal level to make sure we can do different things at the local level. But I do think we have the roundtable now in Pennsylvania that Philadelphia could advantage itself of.
That's great. Thank you, Don. And I was just trying to interject that for those of you who aren't familiar with the inner workings of the CDFI fund certification process, first, you should be grateful. And second, this is a highly technical and hugely important issue. Mike, last response, and then I'll say some thank yous and we'll let everybody go. Mike.
From a neighborhood perspective, we talk about areas of concentrated poverty need concentrated opportunity. So what can CDFIs do in Philly and anywhere else, to at least have a portion of their work focused on particular low-income neighborhoods. Who are the right partners? What are the right tools? What's the right kind of loan capital? What's the right kind of underwriting? Is there a real estate component to this that can create some long-term affordability? And that's a different set of activities and partnerships than most CDFIs have had historically. But that's the thing I wanted to leave with. Thank you.
Great. Thank you. Unfortunately, we've run out of time. I want to suggest that if we can capture these questions, we might be able to create a Q&A and let each of the participants respond a little bit to some of the great questions that we weren't able to get to. But at this point, I need to say thank you. Thank you to our panelists, first of all, to Jody and Della and Mike and Don, and thank you to Don and the Reinvestment Fund for keeping Jeremy's thinking alive with us, and his ideas and his inspiration alive with us. So appreciate that. To Susan Wachter, who I hope was able to join eventually. I don't know if she was able to join, but Susan and the Penn Institute for Urban Research and Research, thank you for hosting this and making it possible and supporting us in doing all of this. Special thanks to everybody who came and is part of our conversation today. You were great. You gave us lots of things to talk about, and I hope we can yet respond to some of the things we didn't get to. Thank you to Mayor Parker and to Karen on her behalf for bringing this forward to us and giving us a chance to engage. And I trust this is the beginning of a conversation that will involve not only CDFIs, but communities and the city and everybody who cares about this city. So thank you, Karen. Appreciate you being part of that. Finally, thank you for spending your time with us. I think we're done, and have a great day.
Thank you.
Thank you.